Hi, everyone. This is Joseph Trevisan from FX Solutions. I'd like to thank you all from all corners and all time zones of the world for attending. We do this once a month. I hope that it's instructive. That slight lisp was a tribute to the folks at FX Street who are in Barcelona and who arranged this and who have advertised it so that you can all attend. Again, I thank you all for being here. The topic today goes back a ways as far as my attention to it, and also as far as it looks forward to what seems to me to be one of the crucial topics in international economics and also foreign exchange for the next 10 years. You know, I've been doing foreign exchange for about 20 years, and when the market changed very much with the advent of the internet and the beginning of the euro, in 1999, one of the questions that many traders were asking themselves, well, is this going to diminish the foreign exchange market? Are volumes going to go down? Are people going to lose interest? And when they lose interest, will we get some sort of return to stable exchange rates? And on top of that, of course, it being a trading application and a very volatile one, everyone was looking for the next big thing, just as they would in other areas, certainly in computers and in software and things like that. And everyone always looked to the most natural place in the world for the next big thing. In this country, in the 19th century, the phrase was, "Go west, young man." I think it was Horace Greeley who said that. I don't know that Horace Greeley himself ever went west, but he advised other people to go west. The equivalent these days, and for the last 30 years, would easily be, "Go east, young man," although now it would be young man and young woman. East, of course, meaning China. For Western producers, for Western sellers, for people who are looking for markets. I mean, one of the things that everyone forgets about General Motors and all the turmoil and the restructuring they've had is that I believe General Motors has the biggest individual share of the market in China, and they are very, very profitable in China. So it always appeared with that analysis, and that's true in Europe as well, that that view and their international department and their ability to build cars and make money clearly was not something that they didn't know how to do. At any rate, they moved to China. They've been very successful in China. That's been true for many other companies as well. More so, it seems, for the Chinese economy, where the economy is built on the export model. But the Chinese, having accomplished a rather phenomenal change in their economy in 30 years, frankly, there hasn't been anything ever like it in the history of the world, are also astute enough, in my judgment, and I actually have been studying China for a long time. I studied it in grad school, and probably would have gotten my degree from the East Asian Institute, where I went to school, except that it was required to be fluent in a language, being Chinese, and the reality of my learning Chinese in 2 years didn't have much reality. So I never got my degree from East Asia. But at any rate, I remember writing a paper on the Chinese banking system in the late 80s, maybe 88 or 89 when I was in grad school. There was no banking system. It was a fantasy system. All of the state banks had accounts with each other, and they sent money back and forth, which were really just accounting notations, whenever they felt like it, largely under political instructions. There really was no capitalist finance system in China. This was, amazingly enough, 20 years ago. Now, the data that I was using was probably about 4 or 5 years before that, but essentially there was no data. 20 and 25 years ago, there was no even remotely modern finance or banking system in China. We must keep that type of time frame in mind, because when you're looking backwards, it's easy to see how far China has come as far as their economy goes and what they have developed in 20 years. When you take that type of ability and that type of view and that type of focus, because this economy is to a much greater degree than we're used to sort of a planned economy, but it's not a planned economy in the 5-year plan model, although believe it or not, China still does have 5-year plans. It's planned more along the Japanese model, I would say, where the government often sets areas of interest and lets the entrepreneurs move in. But also, China has been phenomenally successful at getting in foreign capital. It's one of their chief ways of funding the expansion. So if we look at 20 years ahead, and we remember the phenomenal change in China in the past 20 years, it becomes easier to imagine a very much different world currency system, world finance system, if you keep that in mind. From today's view, everything looks fairly stable. With a 20-year view, it does not. So, 10 years ago when the euro began, and I'll get to the charts in a second, I just want to illustrate a point. 10 years ago when the euro began trading, and traders were concerned that this would diminish the market, that they were looking for the next big thing, naturally, the thoughts and eyes and anticipation turns to China. It's still the biggest country in the world by far, well, not so much by far anymore, with a phenomenally well-run, even if you don't agree with it, economy, considering what they've achieved. China, over that time, and under the example of many other economies that have moved successfully from undeveloped to developed exporting stage, kept their yuan to benefit their exports. The Japanese did this, although they're having a hard time doing it now. A number of other countries have done this as well. It's all part of an export-driven development model. It's one of the reasons, of course, that the United States and other importing countries have managed to, rather successfully, to keep a lid on inflation. It isn't only because the ECB officially and it isn't only because the Fed, the ECB, and other central banks have been very successful in targeting and keeping control of inflation. Perhaps that's an influence of the monetarists. However, another factor in that, and a very important factor in that, is the advent and the great supply of inexpensive goods from China and other places. A manufacturer cannot gain pricing power in the United States where its competition does not raise prices. So that's certainly one of the things that keeps the American and European inflation rates low. But to get back to the yuan. So 10 years ago, even more, there was already, although it wasn't very realistic, speculation about what would the currency markets do if and when the yuan became a convertible and a freely traded currency. My point has always been, and my belief has always been, that the yuan will become a world currency when it serves the purpose of the Chinese government and the Chinese economy. It will certainly not become that way because the Chinese are bowing to pressure from overseas. As we are now, and as our government is embarked on a decade or more of enormous deficit spending, that kind of spending, of course, begs the question. No one can pressure China from a position of a debtor. Our government can hardly go to China and say, you need to revalue your yuan, you need to do this, you need to do that, when we need to keep the Chinese buying our treasuries, and that seems to be the case. Let me just answer a question here, and we'll get back to it in a second. Do you think the Chinese economy has benefited since the post-Hong Kong handover from UK to China? Yes, I think it probably has. I'm not terribly familiar with the interplay between the Hong Kong capitalists, if you will, and China, but its purpose was to gain not its political purpose, but it's certainly its economic and financial purpose was to gain that financial expertise that certainly existed in Hong Kong and utilize that for China, and I think they've been very successful about doing that. Although now I think there is less of the investment that goes through Hong Kong now than it used to, and it goes directly to China, and there's a very good reason for that. It is you cut out a middleman and you also keep there's no need to, let's put it this way simply, there's really no need to do it. The Chinese government and the Chinese economy has become increasingly sophisticated about handling foreign investments, so there really isn't any need to go through Hong Kong, although I'm sure a great deal still does. I will answer all the questions, but let me answer the questions Chinese-oriented right now. Has China turned capitalist? It would be my contention that China was always capitalist and that the interregnum from 1949 until 1979, if you want to put it, was an anomaly. Certainly throughout Asia, the Chinese are known as the shopkeepers of Asia. That is, from me, meant to be a compliment. They have been using their civilization, their products, their web of connections, and their diaspora for 1,000 years or more in a largely mercantile sort of capitalist way. So I would say that China has simply resumed its capitalist ways rather than turned capitalist. Certainly for a country to make the phenomenal success out of a change in economy and in ways of doing economic work that the Chinese have accomplished, and they have, there's no question about this, means that, to me anyway, that there was an inherent propensity for that. Can I prove this? No. I haven't been back to China for 15 years now, and I'm not a China scholar, so I can't speak of the cultural, I can't speak intelligently or at least knowingly about the cultural differences. But certainly it would seem to me, if you look at some of the other countries that have tried this, and one of the examples would be Russia, it would seem to me that the Chinese have had a much greater success with transferring their economy into a capitalist economy. And yes, I see the comment about cheap labor. Yes, that's certainly true. And one of the things, interestingly enough, in the Marxist view of the world was that the value of any good really only came from its labor input. Since there were workers, that's where they said that it came from. They gave really no credit for any capital input being that capitalist. So yes, there was a great deal of cheap labor there. That is true. Nevertheless, there is a lot of cheap labor in many other places in the world as well that do not have not had the type of success that China has had. One more question, then I'll continue a little bit. The yuan is controlled. The China government let it ride free outside China, and they have no control in the genes of old minds there. They hate no control. Yes, that's undoubtedly true. However, I think when it becomes in the interest of the Chinese government to use the yuan gradually, and one thing we must admire about the Chinese and what they've done there has been the gradualist, the long view approach that they have taken and then they have used successfully to developing their economy. I know when the Russians tried to switch from the Soviet-style economy to a private economy, they did it in what I think was called at the time as a big bang, and it did not really work very well. What happened was the people with power retained power, and the capitalist ideal wasn't really spread throughout the country. And it's my view that they would have been better off had they done it gradually the way the Chinese did. You will get many arguments about this on both sides of it. Yes, the yuan is controlled. And I'm going to get to the yuan in a few minutes, so let me put that question off. So let me just keep going on this. Back in March, so we have looked, there has been a long view in the currency markets as to where the next big thing is, and naturally that view turns towards China for all the reasons we've mentioned here. It has not really been true, and there has not really been any replacement in view of the dollar for the world. Now, the euro has done a very good job and the ECB in maintaining its stature, shall we say, or developing its stature in the world. Nevertheless, one of the things that is driving the dollar and drove the dollar to its dominance in the world, I'll answer that question in a second on China being chaotic. has been the way the dollar developed after the Second World War and before that as well, was that the economic power of the British and the British Empire was waning. More and more trade was directed towards the United States and other places, and that trade became more easily settled in dollars. There was simply no reason to use the pound as a conversion between one currency and another. You simply use the dollar. That is something that the Chinese have recently, and very recently, started to do. Now, I don't think there's any interest, there's any push, well, let's put it this way. They've just started doing it. So that means you're not going to get to a great change in the amount of demand for dollars. Now, one of the things we have to remember as far as the dollar goes is, and any currency, that 2/3 of the dollars in circulation in the world are outside the United States. Let me answer those correction questions in a second. And I'm not trying to present a one-sided or a deeply informed view about China, because I have not been to China in a long time, and I'm not a China scholar. I am a currency analyst. So when I view China, I'm looking at China from what we're seeing on the outside and not from the inside. So I will talk about that a little bit in a second. But again, that's not my expertise, and I don't want to be taken for a pontificator on China, because I'm really not. One of the things we have to remember about currencies is that you have very much a supply and demand push and pull for currencies. When a currency is used and becomes more and more utilized for trade settlement between people that aren't members of that country, such as, for example, if China is settling, if people are exporting and importing between China and Vietnam, there had been a great deal of settlement in that currency, in that particular. Now, we have someone here from Vietnam, so we'll find out how correct this is. There had been a great deal of settlement in that trade in dollars. That's not the case now, and it doesn't have to be the case. That kind of trade settlement and also commodity pricing use around the world will give a great deal of demand for the dollar, or whatever currency is used for the settlement. That's, in my opinion, how it starts, when one currency starts to move and take over some of that role from another currency. So let me just look at some of these comments here, and then we'll continue. Yes, I think that's probably true. Like I said, I haven't been back to China since the early 90s. It does seem very much that the government there has been pushing, there's an article in Bloomberg that I just looked at yesterday, has been pushing a great deal of money out into the country. Certainly the Chinese government appears to be quite worried, or at least pays a great deal of attention to civil unrest in the country, which is something there. As far as communism being more corrupt than capitalism, I think if I had to make a judgment, I would probably say that's correct. As far as any country that has a top-down management, the more power that's concentrated in a bureaucracy, the greater chance you have for corruption. I would agree with that, especially when you have a country like China or even Vietnam, which I'm not familiar with, where a tremendous amount of money is being generated. You will find that the permissions become an avenue for corruption. I'm sure that's true. Whether Russia and China under the communists were more corrupt than the West, my guess is they probably were, and maybe still are, but I am not experienced enough with doing business in those countries to be sure. Certainly as far as an ideal, I would say that's probably the case. Wherever there is more central control, there's often more corruption. So back to the yuan and what the Chinese have done recently. The way the Chinese have evolved their economy and their use of currencies has been gradual. They have taken a gradualist approach. It seems to me to be the correct approach to what they're doing. The Chinese have officially permitted the yuan to be used for trade settlement with a number of countries on its borders, with a number of the ASEAN countries. Now, that, to me, is the first step towards using the yuan internationally. It's deliberate. Now, when China, back in March, was criticizing the U.S. government, what the Chinese were saying back in March, and they were quite blunt about it. Now, we know that, and we've seen the comments lately, the Chinese have toned down their comments. And they've realized, although I'm kind of surprised that they didn't realize it in the first place, that when you speak, markets listen. And when the Chinese were being overt and very straightforward in their comments about what the administration's spending plans, the potential for the effect on the dollar, as a matter of fact, I'll read one of them right here. This was from March, and it was the Chinese president, not a minor official. I want to ask the United, I'm sure you've all heard this, I want to ask the United States to protect its credit rating, honor its words, and ensure the safety of China's assets. What I said at the time was this was not a request, it was more like a lecture, and it was a warning. And the market certainly responded to that. The Chinese have good reason, as do other holders of U.S. debt. There has been a lessening of concern about this in the past few weeks. What we looked at from March up until July was, as the Treasury rates rose, was it gave great concern that they were rising because the federal government was about to start monetizing its debt. I mean, if you remember, they started taking off, and the dollar started going down when the Fed announced their monetary easing policy, particularly the Treasury purchase of $300 billion back on March 18th. It's always been my view that that was not necessarily the case, that was really a bit of a warning, but really what we were seeing in those Treasury rate moves was a recovery from the absolute lows that you saw in Treasury returns because of the risk aversion back from the great collapse back last fall until March. So that is really what you were getting, really was a return to the historical levels of the Treasury rates and not to a view that the U.S. government was about to start monetizing its debt. What we've seen since then has been a renewed interest in Treasuries. And that has kept the rates low, brought them back down, I think, to about 3.3. I'm talking about the 10-year. And they have recently gone back to about 3.5 or 3.6. But this is a range which is not really indicative that the market is pricing in and asking for compensation for retail, for future inflation or future monetization of the U.S. debt. You don't seeing that just now. Okay, let me answer a few of these questions. Yes, China's view on the Internet doesn't particularly really enter into its economic policy. I don't know how successful the Chinese are at policing the Internet. The Chinese do want control, and you're correct about that, but they are also aware, and they've done a reasonably good job, that they are part and parcel of the world economic system. The Chinese way, they may be, let's put it this way, when and if it is in the interests of China to have a freely traded yuan, then they will. I have my doubts that it will ever be as free, say, as the dollar, but you can make lots of arguments that the Fed and other countries have always tried to affect the control of their currencies, even if they're not 100% successful. Remember, there is a point after which, and the Chinese have recognized this because they began the controlled, you're right on controlled, appreciation of the yuan, I believe it was back in 2006, 2005, if I believe, the summer of 2005. There is a point where a stronger yuan is in China's benefit as well. It helps control inflation. It certainly will draw influence, it draw more investment, which of course has a downside because it may cause inflation. But more importantly, one of the most useful United States foreign policy tools in the past 50 years, I believe, has been the acceptance and the strength of its currency around the world. If people do a lot of business with China, and China wants them to do it in the yuan, to give the yuan not just status, but also to keep its hand in as far as revaluation of its own currency, then people who want to trade with China will do that. And as the yuan becomes accepted, say, throughout Asia as a medium of doing business, this will add to the influence and the effectiveness of Chinese foreign policy. And I think they're aware of that as well. Will they ever let it be freely traded in the world economy? I can't answer that question. I think eventually it probably will be, maybe within limits, but it will be. So China's view back in March, was that the United States was playing fast and loose and offering a great deal of potential danger for its own investments and for the U.S. dollar. Now, one of the things that we've seen over the past, and I've spoken about this before, is in the past 40 years or so, actually the past 35 years, the dollar has been on a long-term decline. It's my view that one of the reasons for that is that the U.S. economy is a, ever-shrinking portion of the global economy because other parts of the world are growing much quicker. So I'll leave that alone. But and a lot of the use for the dollar in international trade was an organic development. The U.S. didn't go out of its way or didn't specifically give policies that it wanted things settled in dollars, but U.S. firms and people doing business preferred the dollars. If you want to do business with that market, you do what makes it easier. And the same thing could very well happen in China and in the use of the yuan as a history around the world. Okay, let me answer a few questions here. China and Greece. This one I'm going to have to take exception to. I don't think China and Greece have a lot in common, although I have people on the webinar saying that both are fairly corrupt, and I have heard that as well. A strong U.S. dollar is a benefit to the Chinese exports. That's no doubt about that. But China, I think, I'm seeing signs within their policy that China recognizes that there is a limit to the success of an all-export policy. Look at the difference, or at least what's happened to Japan and to the economic and industrial collapse in Japan, far greater than any other exporting nation in the past 6 to 9 months, past year, really. Their economy is so dependent on exports without a successfully developed internal market that they took a real hit when the importing countries stopped importing and when trade went down. China has, I think, a much greater view. Yes, I know about buying property in Greece and in Italy as well. China has a much greater internal market, although they do have some of the demographic problems that Japan has in that they're an aging population. I think they probably have a good deal longer to go. So it seems to me that, and I've heard commentary on both sides. And I guess sometimes it's hard to get particularly good figures out of China. As I said, I'm not a China scholar, so I can't comment on that very, very effectively. I've read that the stimulus that the Chinese have put through, frankly as big as the one in the United States when you have a much larger economy, was focused largely on export industries rather than on internal consumption. If China wants to develop as an economic power and one that will have effect and weight in the world, both economically, politically, and militarily, then it needs, in my view, to do what the United States did mostly organically, naturally, and that is develop an internal market so that a great deal of its development is fueled internally, not externally through exports. One is a good way to start, but it is not, if you take the Japanese example, a good finisher. The internal development is far more effective and it makes for a much stronger economy. So that, I think, is the path the Chinese will take. So when you take that view, then a stronger yuan is a benefit to the country. Don't forget, one of the things that has driven the United States economy over many, many years is its ability to both to innovate and to come up with new industries. That drives the higher value investment and the higher value return for its economy. Investment is one of the great drivers of that, because when there's capital out there for people to use to start new businesses, some of which succeed tremendously. That gives a much higher return to the economy than simply making things cheaper than everyone else. In other words, Google and Microsoft and Dell add a great deal, and Apple add a great deal more to the economy than simply making inexpensive toys more inexpensively than other manufacturers. So that is one of the things that I think that where the Chinese would need to go in order for them to develop, to end up with a fully industrialized first world economy. And I think they probably realize that. The reason I say they realize that is simply because, having seen the success of their development and the patience of their development so far, if I can think about it, I'm sure they can as well. So back to where the Chinese are now and what the influence is that they're having on the world. Okay, let me answer this question because this is appropriate. What do you believe would be the implications of a strong domestic Chinese economy and China's hold of U.S. debt in 10 or 20 years? My view of China is twofold. One is political, and political militarily, and one is economics. In the history of the world, most great powers rise and fall based on the strength of their economy. The Chinese have a long view and a very long history. As I said earlier, I believe the Central Planning Interregnum from 1949 to 1979, when Mao Zedong died, I believe it's 79, or was it 76, is, I feel, an anomaly in the history of China. China has been a great power for many thousands of years, on and off, and I think their interest is to do that again. Therefore, their economy, the strength of their economy is, I believe, what would drive it. So, if we have a stronger, and they have developed a stronger domestic economy in China, then will they need to buy U.S. debt? And will they buy U.S. debt unless it's in their own interest? If China has a much lower, believe it or not, a much lower corporate tax rate than the United States. Now, what else figures into a domestic tax rate in China? I don't know. What will happen if in 10 years or 5 years we're selling debt? Because in 5 years, according to the administration plan, we're still going to be selling $1 trillion of debt a year. And the Chinese and others don't really want to buy it anymore, or they're not as eager to buy it anymore, and the U.S. has to raise rates. So if the U.S. has to raise rates, then money flows out of the private economy, out of investment, out of innovation, into government. The government doesn't actually invent anything, it just spends it. It doesn't actually grow the economy, it simply takes from the private economy and redistributes it. You may say that's good or bad, but it certainly doesn't create invention and innovation and a larger economy. So if the U.S. has to pay more money for its debt, it either or needs less debt, it can do things. It can raise interest rates, or interest rates will go up on treasuries, money from the private economy. Or, wouldn't you, if you're investing, you get 5% on a relatively risky investment from a corporate, and you get 5% from the treasury, you'll take the treasury if you're a money manager. What do you have to lose? The risk is lower, the return's the same. If the government has to raise taxes, again, the same type of drag on an economy from higher taxes. So, that is one of the definite implications of a stronger domestic Chinese economy and its view of debt. Put it another way. Will China use its debt policy vis-a-vis the West for its own economic and political interests? Why wouldn't it? We have, and so has every other great power. China's not buying U.S. debt because it wants to help the United States, although in a specific economic sense, yes. It wants to keep the United States humming. It wants people to buy its exports. True. But when that changes, and it will change, because one thing that we can be sure of is that it will change, then it will become an issue I feel, for the U.S. government and for China. I'll answer one more question here. Could the China bankrupt the U.S. tomorrow? Yes, of course it would bankrupt itself. One of the most interesting movements in the markets that I saw was as the dollar declined as the U.S. interest rates were rising from March and then with a brief dip until about 3 weeks ago. That is not a normal reaction for a market. If rates in a country are rising, that generally supports the currency. Makes kind of perfect sense, right? But I think what we saw at the time was a fear of monetization, an explicit fear of monetization by the U.S. government because of the $300 billion, and also the other programs as well, but the $300 billion Treasury purchase was a direct monetization of U.S. debt. One portion of the U.S. government buying the debt from the other and giving in the money, printing new money and sending it out to the economy. That type of fall in the dollar. Do a thought experiment. If in the last FOMC meeting the board had announced another, say it's a doubling, a new $600 billion purchase of treasuries, it's my feeling the dollar would probably be sitting at 155 against the euro right now, at least 150. There would have been a tremendous sell-off in the dollar. And that's the great concern, and I think the reason that China will not do a precipitous move, it would make no sense. In fact, we had the TIX numbers out yesterday, and China had basically stopped buying treasuries in April and May. No, in March and April. The new May numbers came out, and there was a purchase of, the Chinese purchased $38 billion more of U.S. debt. So that gives you your answer as far as what China's current interests are. The one thing that would be hugely damaging to the world financial system, U.S., China, to everything else, would be an abrupt move against the dollar in the currency markets. That would do a great deal of damage to the U.S. economy, and by, of course, trade reversion, that would also put a great deal of pressure on China and the exporting economies as well. So it's not something that one has to concern oneself about. I don't think the Chinese are going to go out there and start dumping treasuries. The Russians have reduced in the latest numbers. The Chinese bought $38 billion more in May. The Japanese reduced their holdings by about $8 billion, and the Russians reduced theirs by about $12 billion. The Russians' reduction is almost 10%. So the Russians are willing to act on what they say, but their amounts are not really noticed, and the Chinese would be noticed, and that's one reason probably the Chinese didn't do that. Remember, there isn't a lot of alternative right now in the world for holding debt. You need huge debt markets to take care of where you can put the type of surpluses that are running through some of these economies. There isn't a huge market anywhere except the dollar. Now, and not only that, our government is assisting in this by issuing all of this debt that somebody needs to buy. So on one hand, there are huge surpluses that need to be invested someplace. On the other hand, our government is putting up its hands and saying, hey, what about us? So you have a real quid pro quo in that as far as where you can go. There isn't a lot of choice in the world debt markets how to do this. And I'm sure the Chinese feel, and I'm sure they know, that yes, they could invest it in their own economy, but there's only so much investment you can do in an economy, certainly in a developing economy, without driving huge amounts of inflation. If the Chinese just start flooding their economy with spending, you will create a great deal of inflation, and that is a huge risk as well. So none of the options are immediate options. They're gradual options. They're things that people can do over time. Many of these things have always happened, have always happened in sort of undirected ways from the governments. And I think there's some of that going on as well, though. In the Chinese case, clearly I need to go back to China and work on my Chinese and see what's actually going on there. I don't know how much I'd find out. So let me look at a few of these comments, and I'll get to my the close here as to what's going on. So China could not bank. It's like saying, could you kill the person sitting next to you in the next 2 minutes? Yes, maybe you could, but that doesn't mean it's something that's going to happen. It's kind of an unfortunate analogy there. I apologize for that. You probably could, but it's not something you're likely to do. And so the Chinese could refuse to buy any more debt, and even that wouldn't matter all that much. It would, more than anything else, I think, probably end up devaluing the dollar. Even though that would force treasury rates up, most likely it would still probably end up devaluing the dollar. The market, it seems to me, fears monetization in the U.S. more than anything else. Do you still keep FX brokers in USD? Yes, we're an American firm. We keep our money here, but that's not on the topic. I'll answer that afterwards. If anyone has any questions about that stuff, just send me an email, and I'll be glad to answer that. Yes, you're correct. If you keep dollars here, of course, and the dollar devalues, and you have to transfer it back to your other countries, that is an issue. We have ability to keep funds in other currencies. We simply haven't implemented it because we don't have any demand for it. If there was a lot of demand for it, we could certainly do that. World currency. I will love to talk about a world currency. They actually had me on TV talking about that. It was pretty amusing. Okay. The Chinese have been very public about their concerns, but they're now back buying treasuries. I think they understand very well, as most other people do, that any moves, as I said, have to be gradual, and it seems to me that the Chinese are making some of the first moves. After all, China doesn't only trade with the United States. They trade throughout Asia. They trade with Japan. If those countries, if China wants those countries to start settling in yuan, and it makes the funds and the ability available, then it's my feeling that very quickly a great deal, if it turns out to be an efficient way of doing it, that means the Chinese have to do things to help the efficiency, then it will very quickly become a method of settling. Because don't forget, what's the history of China in the past 4 years, 3 years in the yuan? It's been a gradual appreciation. There isn't anything about the Chinese economy and its place in the world that lets one, that will give one the suspicion that the Chinese are about to start devaluing their currency. It may be stable for a while, but gradually it's going to start appreciating again. They've proven that they're willing to do that because they did that, and it's the only logical place to take it. So, if all of that trade throughout Asia to start with, and I've seen estimates that in a couple of years, this could be, yuan settlements could be 40% of the trade with some of the countries, certainly on the Chinese rim, then why not? There isn't anything negative about it for an importer or for an exporter from that part of the world. In fact, it is all to their advantage. So it seems to me a logical progression. Now, of course, you're correct. When China starts sending yuan overseas, they start to lose control over what happens. Look at the United States and the dollar, or any of the freely traded currencies. Our government would probably love to have much more control over what happens to the dollar, but frankly, it doesn't have it. The one check on the government right now in our country could be a serious devaluation of the dollar. Because what would that do? That would, of course, drive inflation and interest rates up in the United States, and that would have a very detrimental effect on the U.S. economy, something which, of course, the government is very much concerned about. So the currency markets do, in their international and unregulated sense, provide a check, a different opinion, if you will, on the actions of governments. And China is very aware of that. How could they not be? Everybody is aware of it. So yes, when they start sending yuan overseas and they make it available, they do lose a certain amount of control. There's no doubt about that. But on balance, I think it would be a great benefit to the Chinese economy and to China's political position and financial position in the world. So yes, nothing is without cost, but I think that's a cost that they would certainly be willing to bear. They've also signed, I know I wrote about this, they've also signed a number of central bank agreements So that's currency swap agreements, the kind of things that the Fed does with the ECB and others to provide with interesting list of countries. I think I got this from Bloomberg. Argentina, Belarus, Hong Kong, of course, Indonesia, Malaysia, and South Korea. Those make sense, but how did China fit into this? Maybe it has to do with some of the exports, and I don't know the content of China's trade with the size or the content of China's trade with Argentina. Maybe there is a sizable amount of trade there, and that would make sense. Belarus, again, same question. The other ones, Hong Kong, Indonesia, Malaysia, and South Korea, of course, makes sense. Again, this will not by any means establish China and the yuan as an international financial center or an international reserve currency. But these are the ways that develops. Remember, one of the major roles of an international reserve currency, of the dollar primarily and the euro somewhat, is a store of value. That means you put your extra currency in the dollar and you leave it there forever, basically. And you're not concerned overly within a certain band that it's going to depreciate. Nobody is sending their currency reserve to Zimbabwe because it won't be there in any value 3 days later. Either a stable or a slightly appreciating currency becomes an attraction. If your view long term is that the yuan is going to appreciate, and it's certainly my view, and you have the ability to store your excess in yuan, then why wouldn't you do it? Now, right now, you can't do that. There's really no place to do it. The way people have done it is that they invest in China, and they get their returns by the yuan that they take out of China, which has been gradually appreciating for a couple of years now. So that's one way to do it. Let me just wrap, and then I'll answer a few more questions here. As I said earlier, it appears to me that China is serious for political reasons and also for economic reasons about entering the world financial system in a serious and in a way that will benefit China's trade and China's economy. It is not and should not be viewed, in my opinion, as a zero-sum game with the United States or other Western powers. The economic issues in the United States, in my view, are not generated on the other side of the Pacific. They're generated here at home. It is the actions that we take and choose to take that are controlling our deficits and the other economic issues that are current in the country right now. Those are under our control here. China will do, as every other country will, what is good for China. It will do less what is good for the United States unless that is, first off, good for China. This is the way we have always governed our economy. It's the way economies and world politics function. So I don't think that there's anything particularly ominous about the moves that China's making. They all seem quite sensible to me from a Chinese point of view, and also from a United States point of view. After all, in an opinion of mine, the type of deficit spending that our government is planning does not seem to partake of a great deal of reality. When you depend on other people for your economic growth and to fund your private distributions, then you basically put your country under the control, to a greater degree than before, of external financial powers. So that is my talk about that. There's one question here which I will answer. I know I have to finish. Will China one day rule the financial world? If you're going to extrapolate from current trends, rule, no. Partake of the rule with others, absolutely. With economic power goes financial power, goes political power, and eventually goes military power. one of the unusual aspects of world current situation that two of the world's former military powers, Japan and Germany, were essentially demilitarized under the settlement of the Second World War. It seems to me that had that not been the case, Japan would have a much different aspect right now just based on its economic prowess since the Second World War. China is under no such compulsion. I thank you very much for attending, folks. I hope it was useful. If there are any questions or any comments, please send me an email. I'll put it up there, and I would, of course, like to thank the folks, Maud and Adina, I think, from FX Street. Thank you very much, folks. Bye-bye.